Hi, David. This is Dennis Wilborn. How are you today?
I'm doing well. How are you?
Hey, we're doing okay. Um, Guys, I'll just share a little secret that we had an accident behind the control panel today, and somebody forgot to push the record button when we did the first go through. So we're going to do it again for you because we want you to know about what's going on in the market. So, David, that's one thing I really love about working with you, David, is that you care about the people who subscribe to your newsletter and service, and you and Harlan both do, and we want to make sure that people get what get the update. So we're going to proceed and move forward.
Yeah, and practice makes perfect, so should be a good one.
That's right. I want to remind everybody that what we do is and present is for training purposes only, and that traders should paper trade any new method prior to the risk of their own personal capital. So I showed this same slide last week, David. It's the market update for this weekend, but I showed this same slide. How do you ride a bear? And the answer is the same way you ride a bull, in the direction it's going. And I'm not saying that we're moving into a bear market, but we got a pretty nice sell-off this week, and we'll see what happens as the indices approach support. One of the things that I really like about what we've done, and where we can we've got a really darn good track record of showing what has happened in the market for that week, and then our perspective of what may happen the following week. And I highlight down here, we basically called the S&P, we was doing a long-legged doji. For those who trade candles, you know what that is. But it's an indication that the S&P closed last week before this one, with big indecision. And I asked the question, are we getting traction to the downside? And clearly that was, with yesterday and the day before sell-off, that question was answered specifically. So move into this week, David. What I find is interesting, and it may be showing a little bit of the initial kinks in a potential trend reversal, but the S&P did close below the 50-day moving average. Now my question is, where's the support? The NASDAQ closed right around the support level of the 50, but actually breached it. And so again, we start asking, where's the next level of support? The Russell definitely closed below its moving average, and now we're saying, okay, it may be heading to the larger support zone that is down at the end of this lateral trend channel that we'll see a little bit later. But I kind of leave it with going into next week, if we get any kind of event that stirs the emotion, the fearful emotions, we may see a little bit of a bounce, but then if fear starts to run wild, people will start running for the exit. But again, we'll have to wait until next week to see if that's what's going to happen, because we may just get a little gradual bounce. I know, David, you're going to talk a little bit about the summer doldrums and what happens during the summer, and that's exactly August has historically been a really tough time to trade, right?
Exactly. Just not a lot happening. Not
Yeah.
a lot of people around, and low volume, so big moves in either direction are, it's prone to big moves in either direction because you just don't have a whole lot of volume.
Yeah. And one of the indicators we've been showing over the last few weeks is this percentage of stocks percentage of stocks above their 20-day moving average, and this is on the NYSE, which is which is a real good sample size of particular stocks. And in the past, what's happened is every time we get down into this lower zone where this is considered an extreme, today we finished with the the percentage of stocks below their 20-day moving average, or above their 20-day moving average, is only 21%. So that's fairly significant. Every time we've gotten down into that area, typically a bounce or a reversal is not far away. We may be seeing that right now. that we're looking at. The market is looking for the place where it can bounce. And one of the things that I pointed out in several of our other webinars, David, is that if it doesn't mean that the market's going to spring out from this low and run up. If we get into one of these sideways trading zones like we did earlier this year after April, you just got this grinder, this meat grinder effect and this type of market, very choppy, very indecisive, is really a challenge to trade. And one of the other thing that I will point out is this was the last part of August, in the last couple of weeks of August last year. We got a very nice bounce up, good relief rally that was definitely tradable on the S&P, and I took a lot of stocks with it. And then a reversal off, fell back down, and then we went into the end of the year rally, just about the first part of October, which then led to a really significant, nice rally going into the end of the year. So let's take a real quick look at Yeah, David, I know you're going to talk about Facebook because we've already practiced this once. And I was looking at the chart of Facebook as earlier. It is setting up a nice little pattern. It's come back and filled the gap, and I know you'll talk about that in a bit. On the S&P, broke the 50 very nicely. Hasn't done that all the way back since here in April. So that's what, 4 months ago? It has dropped that, and now it is searching for where will it find support. And isn't it kind of interesting that the support here from this last breakout is just about at the 100-day moving average? I look over here to the weekly chart, and the thing that stands out is this is about about a year and a half's worth of data. Is every time the prices have gotten down to the bottom of this price channel, we've gotten a bounce. And so for those who like to trade ETFs, which I talk about trading TNA and that type of thing in my service, is when it gets down there, we've had a reversal. Now, of course, the other thing we're looking for is what happens if it gets down there, starts the reversal, but then the reversal fails. Well, that can show us some initial kinks that, well, maybe this time the market's going to roll over for a more significant downtrend, because all topping is a process. It's not just a one-time event. The composite, when I saw the composite earlier today, about 15 minutes before the close or so, what was happening is it was actually holding just above the 50, but now it has closed below the 50. And so typically when something closes below the 50 and this is a little long-legged doji spinning top, oftentimes when it closes below a moving average, it increases the probability that it will do a next stop at the next moving average down. Well, this is a really nice level of support where you could see it could fall a little bit further, bounce off of here, because we see our other indicators still. The momentum has not come back into the NASDAQ as of yet, and we may not see momentum until the end of the summer. The Russell. I've extended this support zone on across because as we see here on the weekly chart, what's happening is we do have a really nice, let me get this, a lateral channel that's going on, basically a trading range. And the Russell will become very interesting to me when it gets into this area down here, which may lead to some potential trades in TNA. I won't, there's no guarantee, of course, that it's going to continue on back up to the top of the channel. If it does, that would be great, because that would be a significant, significant gaining trade. but I'll be very interesting when it gets into this support zone. What kind of candlesticks? Does it start showing some reversal candlesticks? Because on the weekly chart, the Russell, David, is looking like if it gets down here, but we maintain our divergences here on some of these indicators, that could be a precursor to at least a real healthy tradable bounce. So, David, that's what I've got for the indices right now. How about you talk about some of the stock you guys are watching? I know that we've been trading a couple of the same things, but you guys have done a bang-up job with some of your earning trades this week.
Well, thank you very much, Dennis, and that was another great analysis. And yeah, it's earnings season's been pretty much where all the action's been so far. It's been a really fabulous earnings season, and we got a lot more quality leading stocks that are going to be reporting next week, so I expect that to continue next week. So yeah, just a great month, another good month in July. Even with the selling this week, we locked down $3,800 or over $3,800 in gains from trades we closed. We still have some open trades. But these are just from trades we closed. We had some really big ones. Twitter, which I'll show you later, nice 22% pop on earnings. Facebook over 20%. WUBA 11.5% on our first half of the position, and we still have some remaining shares. So it's been a really, really great month, and it's just trading what we see on the charts. And going in, as we look at the indexes, for us, we really pay more attention to what the stocks are doing and let the action in those stocks dictate what we're going to do with our trades. And when we start selling off like we've done the latter part of this week, we get a lot of questions of, well, is it time to short? Is it time to short? And, well, not yet, because we need, in order for that to happen, we need to see many of these leading stocks that have broken down and broken some support levels rally back, and what was support could now be resistance, and should that happen and they meet resistance there, that's when we're going to look at shorting some stocks. But right now, the patterns that remain are all on the long side, and that's where our focus is going to continue to be. We're definitely getting closer to support levels. So what a difference a week makes. Last week we were talking about the markets being at resistance and why we don't like to buy stocks at resistance, and we were starting to take some trades off the table, some profits off the table, and this is why. This is why we do that. So if you look at the indexes just real quickly, we've got multiple levels of support here on the NASDAQ. We have lateral support, which it held today. There's the 50 days nearby with the trend channel support. We also have additional lateral support and various Fibonacci levels here. And our newsletter today talked all about Fibonacci levels, and we're probably going to talk more about it this weekend. So we're definitely what we call in the zone for a bounce at some point. So it's just a matter of seeing the indexes stabilize and where and when that bounce is going to take place and what setups are going to be available to us at the time being, or at that time. But for the time being now, we're mostly cash. We have a couple positions, and we're just hanging on to them because we know we're closer to support than we are resistance. Same thing on the S&P. We're at trend channel support. We have many Fibonacci levels here, and we're also well oversold short term. So we're not going to go out and start shorting stocks right now because that's a little bit late to the party. What we're going to do is we're going to look for a bounce. We're going to make money off that bounce on the long side setups we have, and then we're going to see if there's short sell setups there. That's really how the market talks to us. Do we have short sell setups on our watch list or long side setups on our watch list? And right now it's all on the long side. So that tells us that it's a little bit too early to go out and start shorting. So this is exactly why we trade like we do, where we buy stocks on pullbacks. We don't chase stocks making new highs because of what happened this past week. We wait for stocks to pull back. We use trade size risk management, no more than 5 to 7% of our portfolios in any one position. And that's really important because if a trade doesn't go your way, if you have a 5% position and let's say something bad happens and you lose 10%, which rarely happens to us, but I'm just using that as a worst case example and a good mathematical example. A 10% loss on a 5% position is 1% of your portfolio. So it's really easy. That makes it really easy for us to be objective about the trades and just do what the charts tell us to do, versus letting our emotions and our fear, guide us into and out of trades. So we just, real simple, we buy support, we sell resistance, we do the opposite when we're shorting, and perhaps in the next couple of weeks we'll be talking more about that. But we just trade what we see, not think here or fear, and that's been working out for us really, really well. And that's one of the reasons why, Dennis, we've had really good responses to the content of our webinars in terms of the market.
You betcha.
We've been pretty spot on with what's happening in the market and what's likely to happen the following week. So, and it's just because we look at charts. We don't worry about the headlines and what we see on TV. It's just what are the charts telling us to do. So that being said, for us, I don't know if the market's going higher or lower. I just do what the charts tell me to do. I think it's going to be bouncing at some point here because that's what the charts are telling me, and that's what leading stocks are telling me. And that's a good position to be in, where you're just simply trading what you see, and you're planning your trades and trading. You're planning your trades and trading your plan. Okay, so 3 things you need to know: uptrends and how to trade them, downtrends and how to trade them, and change in trend patterns. We talked a lot about change in trend patterns back in April, the last time we had a decent sell-off, and we made a lot of money off of those patterns. And the last couple months, it's been all about uptrends. It's still all about uptrends, and perhaps soon we'll be talking about downtrends, but the market will make that call, so we'll see. So with uptrends, there's 2 patterns that we look for. Uptrends, pull back off highs patterns, stocks that are in confirmed uptrends above the 50-day moving average that have pulled back in a low volume, orderly manner towards support. And Tesla is an example of a stock that's in a little bit more of a longer downtrend than we typically look for, but it was in a long downtrend. It tightened up real nice here, and then it made an explosion here above the pink line, which triggered our long side trade. And we sold part of it here at resistance at the trend channel, and it pulled back and found support right where it triggered our long side trade. And we've been riding it up the rest of the way with the other half position. So Skyworks Solutions is a really great stock that's been in a confirmed uptrend, as you can see by the trend channel here. And it had this nice gap up on earnings, but it gapped up right into trend channel resistance, and it's been pulling back very nice, very orderly, very tight. And we'd love to see it continue to do that back towards support here, multiple support levels: the lateral support of the blue line, the 50-day moving average, and the green trend channel support. So the trade would be triggered on a break above the pink line, but again, we would love to see it complete the pullback and then do that versus doing it now, where it's kind of middle of the road stochastic wise and middle of the road in the trend channel. So we'd love to just see it come back here towards support. So trend channels is another tool we use, which I just showed you. These are stocks that are in confirmed uptrends that are pulling back towards trend channel support. Facebook is a good example where it was down for a while, stabilized, and then formed this nice little uptrend. We initiate our position as it pulled back to support at the trend channel, and then we sold our position on the earnings gap up. So it ends up being a really nice trade. It's just a real simple tool we use. Like I said, we buy stocks at support, and so here we have a stock in an uptrend that's pulled back to support, so we took the position. QIA2 is doing the same thing. It's been in a downtrend for a long time, has now formed a trend channel here with an upward bias, and it's pulled back to support of that trend channel. We just need to see it stabilize here and move higher, and we'll start looking at doing a trade there. It's very similar to how Facebook looked when it started its initial run higher. So okay, so earnings. We're right in the middle of earnings season. It's been fabulous. So these patterns work for that as well. We have a service called Earnings Call where we just look for stocks that have set up patterns ahead of earnings. We buy them ahead of earnings with a modest position, and we sell them at the open the following day. So But it's all about the chart. So we're not just going to go out and buy any old stock that's reporting earnings. They have to have the patterns. If they don't have the patterns, we're not going to take the trade. And we're not going to do every single stock that has a pattern because we can't do them all. And we want to keep it focused on really the best looking stocks that have really nice tight setups that we can take advantage of. So we did that with Twitter. You can see here it's been in a downtrend for a long time, had this first thrust up, pulled back off of its highs, and then traded really nice and tight ahead of earnings. So we took a position, alongside position, ahead of earnings, and got the nice pop, 22% gain. And it was a real modest position. We only took 100 shares of it, so we weren't, going out and mortgaging the farm for this. Just getting a modest position and taking advantage of the pop and having some extra cash flow, and that's what we look for. So we're right in the middle of earnings season. We got a lot more stocks that are setting up for next week. So it's just been a really great earnings season. That's really where most of the action has been. The rest of the market has just been really choppy, hard to make money on either the long side or the short side. But we're definitely looking at what could be a really nice tradable rally at some point here once we're done pulling back. It was very positive to see the indexes stabilize some today and rally a little bit into the close. We'll see if that carries over into next week. And if it doesn't, we have multiple support levels where we could make another attempt. So that being said, we talk a lot about bowling. Investing in stocks is like going bowling. You knock down the pins, and then you have to wait for the machine to set it up. Well, the machine is the market, and the market has now pulled back, and leading stocks have pulled back, and the market's much closer to support. A lot of leading stocks are at support, so the pins are almost reset for us to take advantage of. So we're just going to we just need to see the market stabilize a little bit more here, and some of the patterns to complete themselves, and we should be in good shape to make another run, another profitable month in August. But it is August, and it's typically a slow month. I look at August almost like trading during Thanksgiving week or the weekend between Christmas and New Year's, just real like holiday weeks. They typically are light volume. They typically have a little bit of an upward bias. There's just not a lot of people around. But they are prone to making big moves as well because there isn't a whole lot of volume. So it's just a month that's, we don't want to take it easy. We're not going to go hog wild here because it's August. So it's really a great month to rest, recharge your batteries, and go out and have some fun. And we will be doing that as well. So we do these webinars every Friday, and this is the first in a series that we're going to be doing recording because it's August, but on September 5th we'll be resuming the live webinar, so please bring your questions, bring your stocks. We want to hear from you. That's why we started these webinars, is to help answer your questions about stocks, about investing. And in the meantime, we do have a 15-day free trial. You can go to our website and sign up for that. You get everything our paying subscribers get for free for 15 days. There's no credit card needed. It's just your name and your email, and then you can also email us in the meantime with your questions or comments on stocks in the stock market, and we'll be more than happy to get back to you. So that's about all I have, Dennis.
Okay, Dave, that's awesome. I mean, I think one of the things I really love about both your systems and my systems is that one, they are really geared to and towards helping our individual members, our joint members with our, that's one other thing I want to thank people for is, the people who did subscribe to the joint, the combo service. That was excellent. They really got I think they got a really good deal on it, probably a deal that people won't see again for quite a while, and probably never at those rates. But the helping our members minimize their risk and maximize their gain. And I think as you were talking, I was thinking going into the August month, August time frame, it's a good time just to adjust your expectations. Adjust your expectations so that because the likelihood of gaining a real huge, big 20+% gainer is the probability of that happening is lower. So if you wake up, if you're in a stock or you've just gotten recently into a stock and you wake up the next morning and the volatility has taken it up by 10% or so, it's not a bad idea just to pull some profit off the table, because rather than waiting for the next day, the volatility to just rip you down and you lose it. And so that's what I'm thinking about, is just adjust your expectations, be patient, and in reality, you don't really need to trade during the month of August. You know what I'm saying? Dave?
I do know what you're saying, and I do know what you're saying, and I would normally not be trading, but given that we've come down so far so fast,
yeah,
and some of the setups I'm seeing, I think I am going to be doing some trades this month for sure, because there's too good of setups coming up.
Yeah, I mean it is hard to separate me from my mouse and my order execution finger.
Right.
I want to remind everybody. Dave said, bring your when we do start up the market stock talk again after Labor Day. Bring your questions, bring your stocks, and all that kind of stuff. And I just remind everybody, bring your friends too, because we want to share with as many people as possible.
Absolutely. Don't keep it a secret. If you're doing well with us and making money, tell your friends about it, so they can join in the fun too.
Yeah, because Dave, on that one Twitter trade you were showing, I know you guys went in with just a small position there, but
right.
In one trade you generated over $900, and we've had several of those where you generate, $400, $500, $800, $900 in, within a few days. That one trade actually pays for a person's year's worth of subscription, and
right.
and there's probably going to be some more trades during the year that'll be able to do the same thing. So at the Active Trend Trader, we do a Wednesday night training session, and we've been going over the 5 pillars of an active trend trading system, or any type of systems that basically with the active trend trading you can trade in any type of market condition and we show you what to trade, when to enter your entry action, when to exit, how to adopt and utilize a strategy to minimize your risk, maximize your profits. And we do demonstration trades, like David, the demonstration trade I did on buying Tesla right before earnings and then placing some protective options around it to make sure that if it did go down, you would still be able to generate some cash flow but still protect the position. And that turned out really well in the trade that happened today.
Yeah, that was fabulous. Well, good call on that, Dennis. That couldn't have worked out more perfect.
And so for the month of June, one of the things, Dave, you guys did a really great job with your calls, and the sell-off over the last 2 days, because we let the system get us into the trades and out of trades. We dropped a little bit of our profits that we had had taken off the table with yesterday and the day before's average. But I know that you and I both discussed that overall, even though we had, in reality, 3 trades we had to close for a small loss, it impacted, I put here less than 1% of the total capital that we trade with. It was actually like 0.8%. I mean, that's it was a loss of a little bit over $1,000 on a $120,000 account. And so I know that you guys practice the same type of thing with how you do your capital management, and I do the same thing with the way I provide, talk about capital management or trade management risk. This is from the time we started our timing service and the time between your services and our services, David. I think we've provided or at least exposed folks for profitable opportunities to the tune, what do we say, somewhere between $12,000 to $14,000. We'll have to.
Yeah, I think it's over 15. Yeah.
Ah, okay.
Exactly.
And so I did not put the profits that were made on the Tesla trade today because this is the beginning of August, and I didn't want to make July look better than it was, and so, but we were able to start August with a nice leg up.
Absolutely, that was fabulous.
So here I'll just leave here for a second. Premium basic subscription with Active Trend Trading shows what we offer on both. Clicking, and then for those of you who may have missed it, I had the honor and privilege of being the featured guest on the IBD's weekly radio show last week, and you can still find the recording of that if you haven't had a chance to take a listen at investors.com/radio show. And then David and Harlan are going to be at the San Francisco Money Show later in August. What was the dates on that, Dave?
It's Friday, August 22nd.
Okay.
At 9 o'clock.
And I'm going to come over and hang out with you guys.
Yeah, please do.
And I'll be a plant in the audience to applaud at the right time. Is that okay?
Sounds good.
And then I'll be presenting this next Thursday evening at 7 o'clock to the Fremont IBD meetup group, and I'll be talking about the study I had done on IBD 50 and IBD 100 stocks going back to 2007. It's kind of entitled, if you want to catch big fish, go where the big fish swim. And David, you said something a little earlier about you got a radio show coming up on Monday, yeah?
Yeah, I do a monthly interview on Winning on Wall Street. So you can go winningonwallstreet.com, and it lists their stations as well as you can listen online. So that's going to be 3:30 this Monday. I'll be on talking about stocks.
Cool.
Which I love to do.
And you're going to send me a link so I can get that out to all the folks who like to listen to us on the Market Stock Talk.
Sure.
And then lastly, folks, is after Labor Day we are coming back with Market Stock Talk Live, and we're going to have a little bit of an updated format with some special things planned for the people who like to tune in to hear this. And last but not least, I just want to say, hey, have a great weekend from David at allabouttrends.net and Dennis at theactivetrendtrading.com. And I know you guys are working on a couple of new things to add to your resume as far as All About Trends go, moving into the end of the year, David. I think you are. You working on a couple of things? You don't have to tell me don't tell me what they are, but I know you're working on. We
always are.
Okay.
We always have goodies.
Okay.
Yep.
And then I'm working on a couple of things. One is everybody knows I like to do ETFs. I like to do especially TNA, but we're working on some demonstration things where we're going to be showing some simple option type trades based on ETFs and how to protect, and also the one interesting one that I think people are going to really like is, how to treat your stock like a rental piece of property, and find a stock that has weekly options and then pull a little bit of income off of those, and I call it kind of supercharged cover calls. And you'll be really surprised to see what goes on with that one, David. I'm going to keep the wraps on it until after Labor Day, though.
That sounds great.
So, okay, well, I'm going to bid everybody adieu, and